Class example 4, P Limited acquired all the shares of S Limited at 1 January 2019 for 75,000 Rand. I give you a statement of financial position of P and S. Assets consist out of PPE 9165, investment in S Limited 80,000 shares at cost price 75,000 Rand, trade receivable 6244. Equity and liabilities, the share capital of P consists out of 200,000 shares, also 200,000 Rand, and S Limited 80,000 shares. So again, we see that P Limited has acquired all the share capital of S Limited. Retained earnings, trade and other payables. Assume that the identifiable assets acquired and the liabilities assumed at acquisition date are shown at their fair values. P Limited recognized the equity investment in S Limited in its own records by applying the cost method. Now required. First thing, like all the others, analysis of the owner's equity of S Limited. 80,000, 9,000. P Limited acquired 100%. 80,000, 9,000 retained earnings. How much did consideration? How much should P Limited pay for that 80,000 shares? Well, we saw here that the investment in PS Limited is 75,000 Rand. So that was the amount that he paid, 75,000 Rand. So he paid less than the total net asset value of this net asset value of S Limited. So because he paid less, there is now a gain from a bargain purchase. So the amount that he paid for these 80,000 shares is less than the total net asset value of the company. If I want to prove the goodwill, now goodwill here actually in inverted commas because it's not goodwill. This is a gain on the bargain purchase. Consideration paid 75,000, net asset values of the identifiable assets acquired and the liabilities assumed is 89,000 at that point of time, so there's a gain from the bargain purchase of 14,000 Rand. Do the pro forma journal entries. Now in the pro forma journal entries we have to eliminate the common items, and that is the investment as well as the retained earnings and the share capital of S Limited. Pro forma journal entries, debit, credit, capital, share capital, S, we're going to take that out, the full 80,000. We're going to take out the retained earnings of S, which is 9,000 Rand. We're going to take out the investment, and that is in P's books of 75,000. And then the balancing entry, we need a credit on that side. And that is a gain from the bargain purchase, and that's going to be in the statement of profit and loss. So you saw when we had a goodwill, we took it as an asset to the statement of financial position. But when there's a gain on the bargain purchase, we take it to the statement of profit or loss, 14,000 Rand. Then the next step is to do the consolidation worksheet. Now in the consolidation worksheet, we're going to drop down these two statement of financial positions as is, and then we're going to pass our pro forma journals, and then we're going to calculate our consolidated figures. So here's the two financial statements, exactly as they gave it to us: PPE, investment, trade receivables, share capital, retained earnings, gain from bargain purchase, and trade payables. Our consolidation adjustments, guys, is nothing else than our pro forma journal entries. So that pro forma journal entries, what are we going to do? We're going to eliminate that 75,000 Rand. Investment is an asset, so if we want to eliminate that, we have to credit the asset account in P Limited's book 75,000. Then we want to eliminate the equity of S Limited as at the date of acquisition, so we have to debit in S's books the share capital of S. We're going to debit in S's books the retained earnings of S, and then this thing doesn't balance because I've got 89,000 as debits and only 75,000 as credits. In order to make it balanced, we obviously need a credit there of 14,000, and that is our gain from our bargain purchase, which we said is statement of profit or loss. And then trade payables, 20,000, 20,000. So now we can do our consolidated figures just by adding those other figures together. 91 plus 65 equals 156. The investment is out of the books now. Trade receivables is 62 and 44, so 106,000. Total assets 262. Share capital, only that of the holding company, the 200,000 and the 8,000, but I have to add the 14,000 as well. So 208 plus the 14,000. 14,000 will also become part of retained earnings. And then trade payables, 40,000. The last thing that they want from us is a consolidated statement of financial position, which is basically this column here. PPE, 156,000. Current assets is trade receivables, 156 was PPE, and trade receivables, 106,000. Total assets, 262. Equity and liabilities, only the share capital of the holding company, 200,000. But look at retained earnings now. Retained earnings is going to be that of P Limited of 8,000 plus the 14,000, which then gives us a total of 22,000. It's important. Have a look at that. And then current payables, well, that is only the 40,000, the 20, and the 20. And then we're done.